What's happening, guys? Welcome to the technically first This Week in Crypto of May here on May 7th. We're really excited to have you all here after 3 straight webinars this week. For those of you who made any or all of those, super appreciated. We really enjoyed putting them together, and not only did we get to touch on how a lot of key metrics were looking based on some of the biggest on-chain and social, pieces of data that we have, but we now have archived ways to really demonstrate some of the key ways to show off our platform in the future when people ask, how to discern whale activity, how to look at social activity. So thank you. I want to give a shout out to everyone who attended those. For this call here, as always, I want to mention that we aren't here to give any sort of investment advice or show where the markets will go in the future in our opinions. That isn't our jobs. That isn't what we do at Santiment. We're here to objectively show what our data is pointing to and how that compares to historical moments and where prices go when we see the similar patterns that we're seeing right now. So just to clarify that for those of you who are new, that's how we do things. If you are a recurring regular viewer on this channel, appreciate the support once again. So we're going to start right here on Ethereum, right? Because so much of the talk over the past week has been about the #2 crypto market cap asset. We, of course, saw a recent all-time high just yesterday, and it was at one point surging a little bit higher today. It didn't quite get to the all-time high from yesterday that I saw, but if we zoom in here really quick, and I'll go back to this view momentarily, you can see we had a little bit of a coin market cap data skew, but overall, this was really the all-time high here, right at about 35.78, 35.95 is where I saw it get to on most exchanges. But either way, we're, in the mid 3000s. That's a big deal to a lot of people, especially when we start to get into some social metrics. We'll find that a lot of people did not expect us to be here nearly this fast, right? And that's typically what happens when there's a little bit of FUD and a lot of profit taking on the way up, especially from the crowd. That's giving an asset an increased likelihood to actually get to higher prices until people start to FOMO in. And that's kind of the pattern we always see with crypto. The price will go toward the direction of crowd least expectation.
So Brian, just a quick info for people that might be just joining us and looking at this 3.8K pump for Ethereum. I'm not sure exactly what's going on. No other price aggregator is reporting it outside of CoinMarketCap. So in the past sort of 15 to 20 minutes, for whatever reason, CoinMarketCap has been shifting back and forth between 3.5K and 3.8K for Ethereum. Everybody else has it at 3.5K. Even CoinMarketCap has most like USDT pairs and stablecoins pairs at 3.5K, but the US dollar pairing, for whatever reason, on CoinMarketCap is sort of having some issues. So I'm not exactly sure how legit it is. I would probably call it not legit until I see it on other price aggregators, but just so people are aware of why we're also showing that sort of an uptick and then back and forth between 3.5 and 3.8K on our chart as well. It's because CMC is also reporting the same thing.
Right. Yeah, at first, before this call happened, we were actually suspecting whether there was some sort of arbitrage at play, and we were waiting for prices to catch up. But we have to sort of go with the majority of data reporters right now, which are showing 3,500 is the price. So that's where we are right now. So back to the 6-month view of Ethereum, you'll notice this orange bar, or orange area line, I should say, and this pink line. And they are significant because they are representing the daily active addresses, the total amount of addresses interacting on the ETH network on a daily basis. And the pink is the daily active deposits, the total amount of actual addresses that are interacting that we recognize as deposit addresses. And one thing is very clear here. Over the last 6 months, the orange line, active addresses, have been rising, and the pink line, active deposits, have been declining. that is generally a telltale sign that a coin is bullish. And it hasn't changed yet. We can even look at just yesterday, or I should say 2 days ago, May 5th, we got up to daily active addresses of 704,000, which is a several year all-time high as far as active
all-time
addresses.
high, actually.
Oh, is it all-time high?
Yeah, if you zoom out to the all-time sort of daily activity on the network, it seems like it's not the necessarily the biggest spike sometimes, because it's basically the all-time high view of the last 5 years is going to aggregate a couple of days of data in a single bar. So that also needs to be kept in mind. But even if you zoom into like 2018 respectively, and then go back and zoom into 2021 or currently, you'll see that this latest uptick in Ethereum's on-chain activity is the highest ever. We had a little bit of a slump last week, but now we're back to essentially right around the all-time high in terms of on-chain activity, in terms of daily active addresses sending or receiving ETH, right?
Yeah, no, I mean that makes sense. I mean, sometimes when you're zoomed out enough, we will clump multiple days or weeks together to give the appearance that it might be more high on, January 10th, January 3rd or so of 2018, when in fact it was on a daily and much higher here. And 700,000, regardless of whether it's the all-time high or second to highest all-time high, is massive. We're seeing a pattern that is continuing to show, which is the fact that not a lot of deposit addresses are keeping up with the total amount of addresses overall on the Ethereum network. Going back to 6 months here, it's clear that active addresses have skyrocketed. You can also see this blue social volume bar here that's indicative of the highest moment Ethereum has ever been discussed in terms of social platform mentions between Discord, Reddit, Telegram, Twitter, pro traders chats, all of the public chats that we track. This right before we hit, I think it was right before, if I zoom in here,
it was around the 3.5K. So the moment that we hit, we started seeing these massive spikes in social volume, and it was essentially the highest ever amount of Ethereum related chatter. So I wrote about this maybe a day and a half ago. If you guys look at our insights.santiment.net page, you'll find that insight. Max can link to it in the stream. But if you go back and once again look at the all-time sort of view for social volume for Ethereum, you'll see that even at the height of Ethereum's basically price action in 2017, there we go. Even at the height there, I think it's the second chart. Yeah, there we go. So that's the first one. And then the second one shows the all-time social volume for Ethereum. So this is, I mean, definitely shows that the crowd is more than a little bit euphoric about Ethereum's latest price action. It's showing that essentially, since the dawn of the Ethereum network, and since the first moment that we started tracking social data and mentions of Ethereum on over 1,000 different crypto-related social channels, we've never seen it get this high. Now, is this good for Ethereum? So in this article of mine, at least, I suggested, or at least I said that based on our data, usually these sort of massive spikes in social volume aren't great for the price of the coin. The reason being is that they suggest, or they insinuate or signal that the crowd is becoming super bullish about the coin. The bullish bias is growing exponentially. In general, it indicates peak hype moments, or the points in time where everybody in the market is hyper aware of the rally. Everybody that has wanted to buy into the rally is already bought in. So there's going to be less of a buy side pressure moving forward. And in general, we've done some backtests on this idea, the relationship between spikes in social volume and the coin's price action. And usually, according to our last backtest on a sample size of 650 different events, over the 20 days after the coin experiences this massive spike in social volume, the average price of the coins that we observe drops by 12% over the next 20 days. So if you look back at the current state of Ethereum social volume, it has dropped over the last 24 to 48 hours, suggesting that the crowd is slowly but surely moving away from Ethereum in terms of the interest. In general, the attention seems to be moving towards I don't want to sound too rude to some of the coins, but shit coins. So if you look at the social trends of ours today, there we go. So this list, guys, is a list of the top 10 words that are currently being talked about the most on crypto social media, according to our data, relative to what they've been talked about in the previous 2 weeks. So we're now looking at the top 10 trends or the top 10 trending words on crypto social media at the moment. Look at these coins: EOS, Ethereum Classic, Doge, BitTorrent, VET. It's like you're back in 2018. And a lot of these coins are pumping like crazy. I think EOS is now, it's definitely at an all-time high. Ethereum Classic, I believe, as well. So Doge, obviously, a lot of anticipation as far as Elon Musk's Saturday Night Live appearance tomorrow and how that's going to impact the price of the coin. So we're seeing. First of all, we're seeing the crowd talk about the coins, some of the coins that they haven't really paid attention to since. I honestly, I've been looking at this chart or at this list for at least 2 years, and I can't remember the last time that I saw EOS and ETC in the top 2 positions on this chart. So it's not because of the fundamentals. It's not because of anything that these 2 coins have suddenly, or these 2 projects have suddenly released. It's not about any sort of news or price moving announcements. It's simply because it seems like as the crowd sort of moves away from Ethereum and the money flows into other coins, some of it has gone to coins that haven't pumped since 2018. We're seeing a resurgence of these sort of coins, which in my opinion is probably not great for the market, because similar to this massive spike, an all-time high spike in social volume for Ethereum, it's another sign that the market is becoming very overzealous, and we're starting to see pumps and chatter about coins that we haven't seen in years, coins that really, I mean, not to insult anybody, but compared to Ethereum and Bitcoin and these sort of established top 10 coins on the market, they really don't have much to present as far as their competitive use case. So it's only speculation, and the fact that we're seeing these massive pumps and dumps over the past couple of days for the coins that you haven't probably heard about in the last 2 years, I think it's a sign of crowd mania, and I fear that it's going to have a negative impact on the market action overall over the next couple of weeks. So I would definitely advise caution.
Yeah, just to go off of what Dino just said here, I've never seen the top 10 filled with 9 assets, right? Usually there are at least a few mentions of, just strategy types of words, HODL, FOMO, FUD, like all sorts of different words. There might be some sort of event coming up, but this is all filled with altcoins right now. No mention of Bitcoin or Ethereum either. It's definitely indicative of people focusing increasingly on altcoins. Now, whether you believe they're shit coins or not, that's your opinion, not ours. But when you see dominant mentions of lower cap assets, it can be a warning sign that the crowd is focusing a little too much on assets that aren't pillars of the crypto markets, right? Bitcoin, Ethereum very much are. These assets are on the lower end, right? Outside the top 40, outside of the top 50 for the most part. And that's generally, if I recall, and I didn't have access to this Sand Trends page back in late 2017, early 2018, a lot of increased talks in October, November, December of 2017 were focused on these types of assets. So just something to keep in mind. Doesn't necessarily mean history is going to repeat itself, but you need to be aware of when the crowd is starting to focus on lower or mid to lower capped altcoins like we're seeing now.
Yeah, so just one correction. EOS is not at an all-time high. I meant Ethereum Classic. So if you look at ETC, Brian, and you look at its social volume over the last, overall time since the beginning of the network of the hard fork, you're going to see that this is essentially the highest that we've been since, what is this, like July 2018. It's very, very high. It's something that, this coin, this sort of, in general, a lot of these hard forks and coins like EOS and Ethereum Classic have not been in the center of attention since late 2018. And the fact that we're all of a sudden, for no apparent fundamental reason, seeing a resurgence in these prices and these coins, I don't think it's a good sign.
Yeah, just measuring it against its price to see if we have any pattern here. Looks like ETC USD may not actually show this way, but I find it very interesting that there's just such a huge spike for it for the first time in about almost 3 years, at least 2.5 years.
Yep.
All right. So moving on, let's take a look at Bitcoin here. Obviously, Bitcoin is not being discussed as much, and that's kind of a a lagging type of, or the reasoning is kind of due to the fact that the price has frankly been much more boring to traders compared to the very active altcoins, and of course Ethereum making an all-time high. And you can see here when we look at the daily active addresses for Bitcoin, we had that huge drop off right here in mid to late April that we've discussed over the last couple This Week in Crypto calls. And over the last week or so, we actually have recovered. And this is a good sign. This is more, I wouldn't call it necessarily bullish, but more of a sign of relief at minimum, that our address activity is no longer down here below 1 million. It actually got down to about 839,000, which was like a 3-month low on April 17th. And that directly followed one of the largest address activity days we've seen in a couple of years, which is interesting. So that it's kind of normal for that to happen after a big drop off that happened between here and here, as the crowd got a bit fearful. And then once it started to rise, address activity picked right back up, and we're kind of in that neutral territory. And I'll show you for context that over the last year, it's still kind of back to business as usual, right? This long-term rise in address activity is a sign of health and a sign that the overall number of addresses are growing on the Bitcoin network in terms of actual active movement and circulation between one another. So that's good there. On the volume side, we're kind of in mid territory. We did drop off here in early March, and then we spiked right around the all-time high, as you would expect, in mid-April, and now we're kind of just hovering here. So Bitcoin is essentially biding time, waiting for the euphoria toward altcoins to fizzle out and see whether attention will come back to it, or well, regardless, whether the attention comes back to it in a positive light or a negative light. But right now it's going to be, or at least it has been, ranging while altcoins are getting all of the glory and attention. And that's really all there is to say. I mean, plenty of things we can say about Bitcoin, but from the main metric perspective, that's what we're seeing. I want to actually show the circulation too off of our Sandsheets model. And it's showing that we're still in that bearish territory, just at least through the first week of May. We are seeing a high red bar. That means that compared to the market cap here in the mid 50,000s, we aren't getting the expected amount of unique tokens moving from one address to another like we should be to justify us staying at these levels. This is, of course, only one on-chain metric, and you should combine it with others to get the best gauge on the markets. But here with NVT, we're definitely seeing a lack of circulation. The last few days have been better. That's what these hash marks are showing. But the first few days of May were really, really poor. And until we see consistent hash marks below these trend lines here, it's something to be a bit concerned about, especially when it's following 2 straight red bars for the first time since August 2020. And that was after 5 green bars where the price subsequently soared. This chart here is pretty accurate at long-term price predictions. So I definitely recommend, if you do have Sandbase Pro, keeping a very close eye on it.
Yeah, so sorry, Brian. Just wanted to, since we're still on Bitcoin, I think two sort of metrics that we can there's a few metrics that we can touch on as far as Bitcoin is concerned, and then I think there's more interesting topics to cover as far as or more interesting metrics to cover as far as Ethereum is concerned. So the two metrics that I would suggest we cover for BTC, number one is Mvrv, the 30-day and 365-day Mvrv, and then number two is the behavior or the total holdings of large Bitcoin addresses, which I used as a thumbnail of this video as well, because I find it again fairly sort of disconcerting at this point in time. So let's start with Mvrv, and I think we can start with the 30-day Mvrv, Brian, for Bitcoin.
Sure, I'll just overlay them both.
Sure. So for people that haven't seen our YouTube video or that weren't on our webinar yesterday, we talked about Mvrv and what it means and how we calculate it. Essentially, long story short, the Mvrv attempts to calculate the average profit or the average loss of a subsection of Bitcoin addresses. So the 30-day Mvrv tracks the average profit or the average loss of all addresses that have acquired Bitcoin in the previous 30 days, according to on-chain data. So at the moment, Bitcoin's 30-day Mvrv, which is the red line, hovers at around 0.84%. What that means that on average, the addresses that have acquired Bitcoin in the previous 30 days are plus 0.84% of their initial investment. So they're essentially around the break-even mark, right? So the idea and the way that a lot of on-chain analysts use this metric is that the higher the Mvrv is, the more unrealized profits there are on the table for holders to take. And as a result, apply large sell side pressure and negatively impact the market momentum. So for the time being, and Brian, maybe we can look at the last year of data for Bitcoin. So for the time being, I mean, yeah, and just to highlight the 30-day mark, we don't have to zoom it in. I think just just highlight there we go, the 30-day mark. Okay, yeah, that also works. So you can see that the 30-day Mvrv, according to for Bitcoin at least, and we're going to see how different it is for Ethereum in a moment, and that's where I'm a bit scared for Ethereum. For Bitcoin, the 30-day Mvrv is very sensible. Like compared to January and February spikes, there isn't a whole lot. And I mean, this sort of makes sense given that Bitcoin's latest sort of price action hasn't really been all that great. We haven't really seen any major spikes in the average profits of short-term holders, suggesting that at these levels, there's probably not a lot of incentive for short-term Bitcoin holders to sell because they're essentially selling at a break-even point. So what you want to ask yourself is, if you were a short-term or a new Bitcoin holder, would you sell at plus 0.84%? The answer is probably not, especially if you're sort of somewhat bullish about the state of the market, right? So as far as Bitcoin's 30-day Mvrv ratio is concerned, at the very least, it provides room for price to appreciate further. If you look at the 365-day Mvrv ratio now, which is basically the average profit or loss of long-term or longer-term Bitcoin holders, we can also see that it is relatively low. And this is a word that carries a lot of weight here, relatively. It's doing a lot of work here because at the moment, the 365-day Mvrv ratio for Bitcoin is plus 51%. So there's still a lot of profits on the table for long term. So basically, all addresses that have acquired BTC over the last 365 days, there's still quite a bit of profit for them to take if they want to. However, we are at the same time ways away from previous peaks, both during the January and February rally, which basically peaked at around the same level at about plus 120%, and during the March rally, which peaked at about plus 100%. So for the time being, Bitcoin's Mvrv ratios don't suggest that we are sort of nearing a danger zone. That being said, if you look at, and Brian, let's look at the last 2 years of data for Bitcoin's 365-day Mvrv. Yeah, so just change it to 19 here, just so people can see that relative to 2020, Bitcoin's 365-day ratio is still very high. Essentially, we're still higher than we were at any point during the 2020 price action. Long-term or sort of longer-term Bitcoin holders have still quite a bit of profits that are unrealized and that they can take if they feel the market is in trouble. So I would, generally, I think Mvrv for Bitcoin is looking okayish. I think, assuming that other fundamentals are doing well or the other fundamentals look bullish, I would assume that there could be a potential for Bitcoin to recover. Now, we're going to look into Ethereum's Nvrv because it's very different from Bitcoin. It's very different. But maybe before that, okay, or right now.
we can stick on Bitcoin, sure. I'm just following your lead.
Sorry, yeah, of course. Just before we do, let's move into, and I already saw Mohammed saying that Bitcoin whales are not good in chat. Exactly what I wanted to say. So if we look, Brian, at the balance of addresses holding between 100 and 1,000 and 1,000 and 10,000 Bitcoin, these are the two groups that we usually check out or check in on, so monitor as far as their combined holdings. So what you're seeing right now on Brian's chart is you're seeing the combined holdings in Bitcoin of all addresses that own between 100 and 1,000 and 1,000 and 10,000 Bitcoin. So we merge those two entities or holder groups together. The reason why we merge them together, I talked about this in a webinar on Tuesday, you can go back and check it out, is because it seems like these two groups are intertwined, and very often it seems like they're reallocating between each other rather than selling off and buying. In our experience, the merge of these two groups seems to indicate sort of more clear patterns as far as their relationship with the price of Bitcoin. And you can already see, and I talk about this, pretty much every weekly stream. You can see that previously we have sort of experienced periods of decline in the combined holdings of these two groups around local tops for Bitcoin. Most recently, it happened on, well, first of all, it happened on March, during the March price rally. So March price top, I think, so that's February. There we go, March 12th. Right at the top there, we saw around 40,000 Bitcoin being offloaded, or basically the combined holdings of these two groups of holders have shrunk by around 40,000 Bitcoin in 24 to 48 hours. And then we had another period where the balance of these addresses has shrunk by 50,000 Bitcoin, and that was on April, I believe, what was it, like 5th or
from here to here?
Yeah, April 10th. Yeah, basically from April 12th to April 16th. We had another sort of period of decline in the combined balance of Bitcoin, large Bitcoin holders. And it was actually started even before Bitcoin crashed, suggesting in the short term a lack of confidence by large Bitcoin holders. We are still not seeing these groups of holders, which are likely large addresses, institutional investors, custodian wallets, what have you. We're still not seeing them recover in terms of their combined balance continuing to grow. And this is, I mean, as far as whale sentiment is concerned, I think this is one of a pretty good metrics on our website that you can check in on every day to figure out what the average sentiment is of Bitcoin whales. And what this is telling me, at least, is that in the short term, we are seeing sort of a period of whale inertia and a lack of confidence among Bitcoin whales. And until this chart lets me know that Bitcoin whales are once again starting to accumulate, I am slightly concerned about Bitcoin's potential moving forward. And, I titled the video of this stream, "What does Bitcoin need for another all-time high push?" At least according to historical trends, at least according to the last 6 months or 7 months of data, it would probably require this group of, or I would not be surprised that it required this group of users to begin accumulating once again. So with that being out of the way, now we can move into Ethereum's Mvrv, which I think is a whole different ballgame. And I wrote about this in the insight that Max has shared in the stream there in chat. So you can check it out if you want. Ethereum's Mvrv is mega high, and you would expect it to be, right? But it is clearly at a sort of pre-established danger zone for Ethereum. So if you look at, Brian, the last 2 years of data for Ethereum, let's start with the 30-day Mvrv. We're currently at about plus 41%. Now, I'm not sure whether this is including this latest sort of data point by CoinMarketCap, which says that Ethereum is at 3.8K, which I don't think has still been confirmed. But even let's assume that it's not. It's around plus 40% at the moment. The average profit of short-term Ethereum holders. You can count on the fingers on one hand how many days in the past 2 years Ethereum's 30-day Mvrv has been this high. And most of those fingers would be spent on this period between December 20th and December 25th of this year, sort of the first big spike in Ethereum's short-term price action, right? The first basically pump of Ethereum at the end of 2020. So this at the very least indicates that there's a lot of profits on the table that can be taken off the table at any point in time, and in general it suggests, at least according to Mvrv, that we are currently in the overvalued zone for Ethereum. It could suggest, and usually what it seems to suggest, is that a period of price consolidation or price correction may be needed in order for Nvrv to normalize back to some reasonable levels before we see another uptick in price. Like, for example, in 2020, in the December of 2020, you can see that massive spike in Ethereum's 30-day Nvrv, and then we had around a 10% drop. It lasted for a couple of days. Ethereum's Nvrv sort of normalized back to the sort of +0 to +5% mark, and then we were able to experience another uptick in Ethereum's price. If we look at the 365-day ratio, Brian, we can see that it's essentially showing the same thing. It's even higher, so it's the highest it's been since 2018. It's now even higher than what we saw at this first price pump of Ethereum in December of 2020 or early January of 2021. It suggests that at this point in time, the average profit of all addresses that have acquired Ethereum in the previous 365 days is plus 161%. So it's a lot. There's a lot of profits on the table that at any point in time can be taken off the table. And in general, we haven't really seen both long-term and short-term Ethereum holders in the past. According to Mvrv, we haven't really seen a tendency of these holders to hold at these at these profit margins. We have seen, in fact, a tendency for short-term and long-term holders to sell off and take profits at these margin levels in the past. So that's why I'm sort of kind of concerned about Ethereum's latest push. And I mean, I wrote an insight about it 2 days ago, saying that Ethereum is showing some yellow flags, not just social data as we already shown. It's also showing sort of red flags or yellow flags in the Nvrv department and the net profit loss department, which shows that people are starting to take more profits than usual in terms of Ethereum. So whether this means that Ethereum is sort of at an endpoint or a local top, I'm not sure. I'm gonna, straight out say it. I've been sort of bearish about Bitcoin at certain points in this rally because of fundamentals, and it took a while for the fundamentals to catch up with its price action. So, I would be relatively bearish about Bitcoin based on what we're seeing on our charts on a Monday, and then it would take another 7 days before there was a correction or period of long-term or mid-term consolidation. So it doesn't necessarily need to mean that Ethereum is sort of at a watershed point and that we're going to see an imminent correction. I can't really say that that's necessarily going to be the case, but at the very least, based on historical data, we are at a very interesting point, and on-chain data suggests that Ethereum might be a bit overvalued at the moment.
Yeah, very good. It's very obvious that the 365-day Mvrv is showing absolutely shockingly high Mvrv values right now, and that is something that is going to be indicative of higher risk than usual. Of course, it's only one metric, as Dino said, and it's very possible that prices can range. I mean, the last time that we got as high as this was only a few months ago, back in January. And we had just a very minor drop off, which told all the eager profit takers that it was time to sell. And then as soon as the Mvrv just dropped a little bit, the huge bull rally resumed until we finally had another big correction in mid-20, and then it just kept on happening. So in order for us to really be sold that this is like the ultimate top and everything is about to drop back down below potentially 2,500 or even to 1,500, we'd need to see some pretty major corrections in the Mvrv and a lot of the other on-chain metrics that we just looked at to point to the fact that Ethereum's daily active addresses are looking just fine. I didn't show the NVT for Ethereum yet, but really briefly, it's still showing quite strong, right? We're in bullish territory again, actually. After yesterday was yellow-green like this, we're back in bright green territory, showing we're getting plenty of circulation again. So there's a lot of bullish arguments on top of the bearish argument that Mvrv is showing. To show a few others, we also have, let me show the BitMEX ratio really quick. There we go. So this is Ethereum over the last 2 years. I'll actually zoom in a little bit. Let's just go last 3 months. So over the last 3 months, this BitMEX perpetual contract funding rate has shown that Ethereum's funding rate can actually rest pretty high in the 0.10 to 0.15% range and be able to grow just fine. When it gets super high, obviously like this is a sign that the crowd is becoming a bit greedy because this metric is measuring when the longs are outweighing the shorts or shorts are outweighing the longs. Ethereum over the last 3 months has exclusively shown that longs have outweighed the shorts. These can actually go negative, but they haven't over the past 3 months. But right now we're still kind of in neutral, even I'd argue lower than average territory compared to what we've seen for most of the year. And that means the greed really hasn't kicked in the way you might think when we've seen all-time high levels. I think a lot of people really closed their leveraged longs right here in mid-April and never. I see why the price is still showing Bitcoin. Same points are showing. I just want to make sure it's showing correctly. So the BitMEX perpetual contract funding rate got its highest around April 10th when people thought that 2000-ish would be around the time to enter. And eventually around 2400, we saw the big correction and the funding rate just absolutely plummeted as people thought that was the top. But once it plummeted and the greed kind of went away, that's when the price was able to rally again. And we haven't really seen super huge funding rates ever since, even at all-time high ranges, which is quite interesting. So people aren't really convinced right now that prices can go to 4,000 and beyond. And that adds to the argument that it can go to 4,000 and beyond because the crowd is in mild disbelief here. It's certainly not like neutral territory, but it's at least in kind of mid territory, showing the funding rate is relatively normal.
Yeah, so one thing to add on this, while you're correct, Brian, the funding rate both for Bitcoin and Ethereum is nowhere near where we saw it be at previous price stops, suggesting that the recent rally is probably not driven by derivatives first, but is actually driven by spot. We are seeing a slight uptick in the funding rate on a few different exchanges. So BitMEX, it is remaining relatively normal or sort of plateauing, but we have seen a little bit of an uptick in the funding rate for both Bitcoin and Ethereum on Binance, Huobi, and OKX over the past 24 hours. It has normalized at the moment. At the moment, it's relatively low, but I think yesterday evening, as Ethereum was, trying to break 3.5K once again, we had a pretty big spike in the, relatively big spike in the funding rate of Ethereum on Huobi and Binance, and the same thing for Bitcoin. So it seems like maybe slight uptick in the funding rate on a few high volume exchanges, which might suggest that we are, that we are seeing sort of a resurgence of bullish bias among some derivative traders. But yeah, still definitely not where we were in any price during any price tops over the last couple of months. So Max has already asked in chat, but for those of you that haven't checked it out yet, let us know what kind of coins or assets you want us to take a look into over in the next sort of 5 to 10 minutes. We're sort of closing up our own presentation here as far as Bitcoin and Ethereum are concerned. So we're going to look into a few altcoins that you guys want us to look into, especially if the altcoin that you're interested in lives on Ethereum. That's probably the best thing that we can do for you, since our platform tracks social and development activity data for any coin that we have in our database, but we also provide full on-chain coverage for any coin, for any ERC20 coin. So especially if you have requests as far as Ethereum-based coins are concerned, concerned, let us know in chat, and we're going to check out a few of them before we end the stream. Anything else around the Ethereum that you want us to touch on, Brian?
Yeah, last thing to show here is the weighted social sentiment. Obviously, we did see a big spike in chatter as Ethereum did reach its all-time high. And we actually saw, aligned with that, the highest weighted social sentiment that we've seen over the past 2 years. A standard deviation here of 4.37 above the normal mean of discussion. In terms of both volume and sentiment being our positive versus negative sentiment score is something to really watch. Typically, when you see these big spikes like this, especially if they come in bunches, that can be a sign of a local top forming. In this case, it hasn't really slowed it down just yet, but we'll have to see how these next few days go because 4.37 is significant. We immediately, of course, did drop back down to neutral this past day, but it doesn't mean that this huge spike can't return, right? Because you do see a lot of volatility on this kind of view. I want to see if smoothing, upping it a bit, might actually change things really quick. Yeah, I mean that sort of blends things together a little better and shows that even though we got way up here, it isn't necessarily dropping all the way back down. We're still at pretty semi-euphoric levels right now for weighted social sentiment. So it's something that you need to really watch when the crowd is commenting too positively about an asset. It's indicative of crowd discovery, as Dino mentioned earlier on this call. And it means that a lot of mainstream or novice traders are starting to FOMO in here. And until we return back to these low levels on this more smoothed out view, it's a warning sign for sure, right? Because we can clearly see historically when we had this big spike back here in August, it led to the minor correction in early September. When we had this spike in February 2020, this is a bit of an outlier because we had Black Thursday related to COVID happening. But long story short, when you have the big spikes, it's a sign of a potential high risk of retracement. So keep that in mind. I won't even show Bitcoin for the sake of time, but I think this is a good time that we can jump on questions if you'd like, Dina.
Sure. Max, any favorites among the crowd as far as the coins for us to check in on? So I'm also seeing a question. Tether, okay. Yeah, I just wanted to say I saw a question by Mohammed about Tether. We can get into that in a minute. Any other coins? Okay, Tether and Cardano. Okay, interesting. So as far as Tether is concerned, Brian, let me share my screen.
Go for it.
Okay. So Mohammed is asking what's going on with USDT's exchange flow balance. So we are seeing a few interesting patterns. So I'm going to start with the exchange inflow. Some of you might know, if you've been reading some of my insights, that I like to look at this chart every now and again, especially when Bitcoin dumps. This is the exchange inflow, or the amount of USDT moving to exchanges, compared to the price of Bitcoin, or plotted against the price of Bitcoin. So my theory, and the theory of a few other people that I've seen on my Twitter timeline, is that when you have these major inflows of a stable coin to exchanges, although there can be several reasons why that may be, one of the possible reasons is that people are moving their stable coins to exchanges in order to sell. In order to exchange for more volatile cryptocurrencies, in order to basically exchange stable coins for BTC, Ethereum, whatever, essentially in order to buy back into the market. So there have been a few sort of spikes in the exchange inflow of USDT that coincided with interesting periods of Bitcoin's price action. We had a big one here, a big one here around another local bottom. We had a few other like here, and then if I zoom into the last 6 months, another big one here, as well as here. It seems like as far as the exchange inflow is concerned, so only the amount of USDT moving to exchanges, we've also had another one here. But as Mohammed is saying, if you look at the exchange flow balance, actually today, we are seeing more, oh, this is exchange flow balance for BTC. Sorry, let's move back into the USDT. Right. So we're seeing more sort of, or at least a few spikes down as far as USDT is concerned, as far as the total amount of USDT being exchanged. So the exchange flow balance tracks the difference between USDT into exchanges and USDT out of exchanges, right? So when you see dips in the exchange flow balance, it means that more Tether, ERC20 Tether in this case, have moved away from exchanges, from at least the exchange wallets that we track, than have flown or moved into those exchange wallets, and vice versa. So what we're seeing, yeah, at the moment we are seeing several sort of dips, and we've seen them around local tops for Bitcoin as well. I mean, obviously there's a number of reasons, especially when it comes to exchange outflows. There's a whole lot more reasons why you would move coins, stable coins or otherwise, from exchanges than to exchanges. When it's moving to exchanges, there's simply, or usually, just one reason. For stable coins, there could be a couple, I guess. It could be arbitrage, it could be buying cryptocurrencies, volatile cryptocurrencies, or it can be providing liquidity for leverage trading or whatever. But at least a portion of that money is going to be used to buy into volatile crypto. When it comes to exchange outflow, I always kind of take it with a bit of a grain of salt, because it can mean so many different things. It can mean that, people are cashing out, or sort of have cashed out of BTC and have moved their stablecoin bags back to their private wallets. That could definitely be the case. And I mean, that's why, for example, wouldn't be surprised that we sometimes see dips in exchange flow balance around local tops. But it could also mean a lot of different things. It could mean that people have found arbitrage opportunities elsewhere. They have decided to move into sort of DeFi projects for the time being, to move some of their stablecoin bags to DeFi in order to accumulate yield. But at the same time, like I said, yeah, it could definitely suggest that at least partially some Tether or some crypto traders are selling their cryptocurrency bags for stable coins, moving back into stable coins, and then retreating those stable coins into their private wallets. And actually, we have seen that sort of pattern in 2020 after the coronavirus dump. I think we have seen several sort of, maybe if I look at it here, we might be able to see it. Okay. Oh, right. So let's say 010120. Here, right? This is what we saw during the coronavirus crash. And obviously, like, since then, you can see there's been definitely a lot more activity. This is also due to the fact that stablecoins in general have kind of exploded over the last 12 months. So it's not that there's a lot more activity here as far as USDT is concerned. The Tether's market cap has exploded, so it's obviously going to be more noisy. And in general, I think there's a lot more arbitrage opportunities as well, which is sort of contributing to this noise. But this is, and I wrote about it at the time, we had this major outflow of Tether, and not just Tether, but USDC, DAI, a bunch of different stable coins. We had a major outflow of stable coins away from exchanges in mid-March after the coronavirus dump. What that suggested, and I mean, it was widely reported at the time by Cointelegraph, CoinDesk. I saw it all over the place. Oh, is this, the first signs of the market sort of being very skeptical about its recovery, people moving back to stable coins for the time being? And I honestly think that there was something to it. We actually tracked for a while, first of all, the amount of Tether being moved away from exchanges and moving to exchanges. And also we have tracked the total or combined holdings of large Tether addresses to see, whether there are correlations between the balance of large Tether holders and the price of BTC. And at least at this point in time, there seem to have been some correlations. Like actually, the moment that we saw the balance of large stablecoin holders decline, suggesting that they are starting to move back into the market, is the moment that we saw Bitcoin start to recover here. I wrote about it at the time. Maybe we can find a few of my insights. There we go. Is everyone flooding into stablecoins? So this is the first of the bunch that I wrote. So if you guys want to understand how I look at the relationship between stablecoins and Bitcoin, this is a good one to start. But I wrote a few of them, so you might want to look into this one as well. Okay, this is the one that I'm talking about. Why is Bitcoin up 10% stablecoins? So this is the follow-up to my first insight that I wrote here that said, okay, it seems like a lot of people are fighting it back into stablecoins. So a month later, a month later, I wrote a follow-up when Bitcoin pumped 10%. And I was like, okay, let's revisit this relationship, this behavior between stablecoins, in particular Tether, but also USDC and DAI, and Bitcoin. So what we saw shortly before Bitcoin started to pump was, first of all, we saw these massive inflows of Tether to exchanges for the first time in a while. I'll show you. This was what happened beforehand. Yeah, so I start by explaining that we saw the rise in the balance of large stablecoin holders as the market crashed. So this was Tether. This was the holdings of holders holding between 10,000 and 100,000 Tether. And so the next thing that you're going to see, let me just yeah, there we go. So I mentioned that we are seeing, for the first time, we are seeing a decline in the amount of Tether being held by larger Tether addresses for the first time in a month. And at the same time, we are seeing a simultaneous spike in Tether's exchange-related activity over the past few days. So we've seen, first of all, we've seen a spike in Tether deposits. And second of all, we've seen a spike in Tether's exchange inflow as the amount or total balance of Tether in large addresses has declined. And at the same time, we've seen the same thing with USDC. So this is USDC. This is the amount of USDC held by largest non-exchange holders. You can see that we saw a drop in the amount of USDC held by these holders, assuming that they're moving their stablecoins back into the market, and simultaneously the price of Bitcoin. We've seen so you can see here the amount of USDC held by addresses holding between 1 million and 10 million USDC has dropped significantly, around 25-30 million, 24 to 48 hours before Bitcoin started to recover for the first time since the coronavirus dump. And this is 100,000 to 1 million. We had a similar drop off. And at the same time, we've had a massive spike in USDC's exchange inflow. So these are some of the patterns that I like to look into. So yeah, at the moment, we are seeing a few sort of big outflows of Tether to from exchanges. Like I said, there's more reasons why stablecoins or generally coins would be moving away from exchanges than moving to exchanges. I would probably assume that at least some of it is people moving back to stablecoins because they're concerned about the market, but it's not always the case. So keep it with a grain of salt. All right, are we looking at Cardano or anything else? Max, is Cardano still number 2? Back then, Luke says people took out the USDT to pay their margin call on other vehicle stock market. Absolutely the case. Yeah. What did you say, Max? Cardano. Okay, let's check out Cardano. So you guys decided to look at the coin that we don't have on-chain data for, unfortunately. However, we do have social and development activity data. So we're going to look. And by the way, I believe there might be some news about Cardano and our data coverage of Cardano in the future. I'm not going to say anything for sure just yet, but keep an eye on our social channels. All right. So like I said, at the moment, as far as on-chain coverage is concerned, we cover Bitcoin, Ethereum, all ERC20 coins, Litecoin, XRP, Binance Chain, And I believe that's it. We used to cover EOS, but it just became too expensive for the amount of demand that we got for EOS. So we just scrapped it altogether. For Cardano, currently we don't yet track on-chain data. However, we do have social and development activity data in general, sort of volume metrics and price related metrics as well. So the very least that we can do is we can check out social volume for Cardano and see where we are, and also check out development activity for Cardano and see where we are. This is a great chart. I wish I used it in the webinar that
and Dina, also apply dominance, okay?
Yes, social dominance.
Just to be sure we cover everything.
Okay, the voice you're hearing now is from Maxim, the founder of Santiment. So if he says apply social dominance, then we should apply social dominance. So what social dominance is as a metric. What's the difference between social volume and social dominance, right? Social volume shows the total amount of mentions of a particular coin, in this case Cardano, on all of the crypto social media channels that we track. Social dominance shows the percentage or the share of mentions of Cardano on crypto social media compared to all other topics that we're covering, right? So Max, you want to jump in here and tell us what you see as far as Cardano's social metrics at the moment?
Well, it's quite obvious that the hype is not there. So you can assume it can grow, yeah, but it needs underlying bull market. This setup is quite okay. It doesn't look top shot. By the way, did they appear on top 10?
No, not yet. I believe. Let's see. I mean, it does have a big spike in social mentions, so there's definitely. Oh, yeah, it is. Sorry, number 4 now. So now we're a bit concerned.
So yeah, well, yeah, they need to make top one or two, and then go down, and then by this moment you want to leave. But as we're in a market phase where everything tries to make new all-time high, and it only tops out when there is a focused crowd attention, which shows itself by high social dominance. So you can, but it's a risky game. You can play it. You can play it. And Cardano is not on a top radar, so you can assume there will be more people flowing to it.
It's definitely, however, gaining some ground on social media. And if you look at if you look at the previous spikes in social volume, like actually, let me use the 8-hour interval so that you see it a bit clearly. Like if you check out spikes in social mentions and how they correlate with the price, it's not the greatest, right? But if you, once again, social dominance does show that compared to like a spike in social volume here, there was this spike in social volume also coincided with a big spike in the amount or the share of Cardano related chatter compared to everything else on the market. Now, Cardano social dominance is still relatively low. So it suggests that even though more people are talking about it, it's still not the center of attention, because for better or worse, people still seem to be talking or sort of more focused on EOS and ETC and Doge compared to Cardano. So yeah, I mean, in general, high social volume and high social dominance, especially when they're combined, they're warning signs. There's definitely concerning, right? But at least for the time being, I guess Cardano's social dominance is staying relatively low, allowing potentially its price to grow larger or higher before we see it top out. So usually when you see a coin in the top 3, Cardano is just on the edge there. We've done some analysis on when the coin appears on top 3, and usually it's not great. I can show the backtest very quickly. So the backtest is called Peak Hype. Max, you can share it in chat for people that want to see. This is what we saw. This was 2 months ago, 3 months now. This is the backtest that we've done on 650 different times that a coin's name appeared in the top 3 positions on this list, and what happened with the average price of those coins before and after. I mean, the story kind of, or the narrative writes itself. So in the 6 days beforehand, the price really starts to pump. And this is the reason why we see a big spike in social volume, because the price is pumping and people are starting to talk more about it. And then in the next 20 days, the average price performance of these coins drops by 12%. So definitely when you see a coin begin to claim these major positions in terms of social mind share, it's not a great sign. Now, as far as Cardano's development activity, I think it's very high as usual. Cardano is always one of the most actively developed projects according to our data. Let's make sure that I'm not lying. So look at all time for Cardano. It has dropped a little bit over the last month. Yeah, it has dropped a little bit. Maybe there's some vacation time for Cardano developers, something else happening. But overall, I mean, you can definitely see. So the way the track development activity of projects is we tap into their public GitHub repositories and we only look at and consider code-related events, so commits and other related events in GitHub. We exclude things like comments on code, stars, and GitHub events that aren't connected to actually pushing code and working on the project, because some cryptocurrency projects, they use GitHub almost as Slack and Discord as an organization tool, and some use it purely to code. So we're trying, with our development activity metric, we're trying to filter out that noise as much as possible and only focus on what is this project doing as far as investing in development resources, and as far as pushing code and polishing the product, and maybe even introducing new features. So as you can see, Cardano's development activity has definitely grown over time. It has sort of declined over the last month, but I don't think that's too much cause for concern. Yeah, and if we look at the placement of Cardano as far as its development activity is across compared to all of the projects that we track. So let's see where Cardano ranks as far as its development activity. I think it's probably still in the top 5, but I could be wrong. Last time I looked at it, it was in top 3. So here in the watch list, you go to all projects and you have a bunch of columns, and you can add your own columns or you can remove some of the columns that we already have. But we already have here the development activity over the past 30 days, and we can click on it and it's immediately going to add, there we go. It's immediately going to filter out or rank all of the coins in this watch list of ours according to the 30-day development activity. And the highest at the moment is Cardano. So even with this drop, it's still one of the most actively developed projects according to our development activity metrics. This is not the perfect metric because not all projects have a public GitHub repository. Some also use GitLab. So we're not sort of covering the entirety of the cryptocurrency market as far as development activity, but I think we're by far the most comprehensive providers of dev activity data on projects. So the fact that Cardano is very high, I think bodes pretty well for its mid to long-term potential, at least. This metric is not going to help you a lot if you're trying to figure out whether the coin is going to pump at this very moment. But I think it's a necessary precursor of sustained success and general potential upwards. So Cardano, from a development perspective, from a mid to long-term perspective, team is continuing to work on the product. I would not be concerned as far as that's concerned, as far as that point is concerned. However, social mentions, social volume, and general attention of the crowd is increasing as Cardano breaks another, I believe this is an all-time high. Sure as hell it is. So I would be keeping a close eye on this list. Where is ADA going to go? Is it going to drop, suggesting it's not that high up on the list of the biggest topics in the cryptocurrency community, or is it going to push up? If the price continues to push up, I assume that ADA makes top one or two positions here. And once that happens, it might be in a time to consider exiting your position. All right, we're past the 1 hour mark. Brian, anything to add before we sign off for the week?
Nothing to add from me. Referral links, of course. Make sure you check out your account settings if you want to refer friends and make a piece of their membership payment. We share our initial membership payments with you guys if you want to refer anyone. Also remember that it's 40% off for new Sandbase Pro memberships. So tell your friends about that. The normal price of $44 a month goes down to around $29 with this discount. So it's quite affordable right now, and it'll be going on another week. Just use code SANDSPRINGFLING, and we'd love to see you there.
I'm actually gonna, Max, if you can share my screen once again. I also wanna go over SANR once again, like we always do at these calls, and see where we are and what we can make as far as new predictions on the market. So for those of you that are new to the stream and that are new to Santiment in general, SANR is a project that we've been working on for a good few months now. It's essentially the world's first marketplace, but it's the centralized marketplace for creating price signals. So the way it works is very simple. If you have an idea of where you think the market is going to be headed next, you can select a coin. Like, for example, we've been talking about ADA or Cardano here. We can select a coin and we can choose or say whether the coins in the future price is going to rise or fall. Once we do that, it's going to create a signal. You can see my two active signals here at the moment. And every signal that the moment that the signal gets created on the front end, on the back end, it creates an NFT of that signal or of that prediction, which gets recorded on the blockchain forever. So every every prediction that you make becomes an immutable proof of how you read the market and how you understand the market. So you need to connect your MetaMask in order to use in order to use the platform. So every prediction that you make becomes sort of a part of who you are as far as a market analyst, right? And you can see sort of the leaderboard of the the current leaderboard as far as the as far as the 2-week reward pool for SANR. So every 2 weeks you can create a prediction that gets entered into a reward program. For this, you need to stake a certain amount of SAN. Just keep that in mind because of the fees. But once you do that, it becomes a part of this public list of the top predictors. And if your performance is very high, the way that you can use SANR is to build your relationship and your reputation as a strong market analyst. So for example, let's look at Bullish here, the guy that's handling this stream. Thank you very much, Max. So we can see that at the moment, Bullish has 13 close predictions. And his current performance is plus 112% to those 13 predictions. Not bad at all. So the next thing that you can do when you find people that you think are that have proven to you that they know what they're talking about and that they know how the market is going to move, is you can follow these people and their accounts so that you can get notified the next time that they create a prediction, so that you can essentially front run the market with them. Or if you find an account that is very bad at predicting the market and its performance is, let's say, minus 112%, you can follow them so that you can copy trade them in the future, right? In the future, what we want to do is we want to allow people that have established their reputation, like Bullish here, as a prominent market analyst, as somebody that has shown or proved immutably that they know what the market is going to do. We want to create a way for them to tokenize that knowledge. So in the future, you will be able to issue subscription NFTs for your price prediction signals, so that the next time you issue a signal, you can also issue a subscription NFT where people can buy that NFT in order to subscribe to your predictions. So the entire process is going to be decentralized, allowing you or giving you, the price predictor, complete control and ownership of your signals, right? So with that out of the way, let's go back to my predictions. Ethereum is currently kicking my ass. I believe last week I was sort of using this just to demonstrate how the platform works. But even last week I was already kind of concerned about Ethereum, and I remained concerned. As Michael Burry says in what was it, The Big Short? I might be early, but I'm not wrong. I hope that's going to be my case, right? I might have been early to say that Ethereum is a bit overvalued, but whether I'm wrong or not remains to be seen. So if you want to create a prediction, let's say we're looking at Cardano and we're a little bit concerned about its social mentions, this is just a demonstration of how the platform works. This is not me, actually thinking hard about this prediction. I can say that, okay, Cardano's social volume is already a bit too high for me. You can set up a few advanced targets or parameters like the target price and stop loss order, and we open the forecast. And there we go.
You forgot to stake, but okay.
I forgot to stake this one. I can actually we can close it and we can stake it immediately. So let's do that. Let's stake it. We need to sign the message in MetaMask. Sign it. Boom. I mean boom after it loads, right? But boom, it's going to be entered into a bi-weekly reward pool where the top transactions based on their performance are going to be rewarded with SAN tokens. There we go. So let's see how I do next week. And if you guys want to play along, go to sanar.santiment.net. Create your own predictions. It's free if you don't want to be if you don't want to include your prediction in the forecast program. It's free otherwise as well, but you do need to sign a transaction and stake some SAN, which is going to require transaction fees because, you know, Ethereum.
Only one time.
Only one time. Of course. So the first time that you deposit the SAN balance, and then from then on, it's taken care of. So with that out of the way, anything you want to mention, guys, before we end it here?
Just one thing about Sana, Dean, because I noticed you say it also last week. We do store NFTs for signals, but only for stake signals at the moment.
Right.
The moment. So for these free signals, you have a history, but they're at the moment on the database level. But you still have your history. You can see.
Right.
And the moment we moved our L2, we were able, optimistic L2, to launch it somewhere beginning of this week. But now we upgrade our smart contracts to the latest version. So the moment we have our L2, then we can store everything. And for the moment we mint for staked signals, and we store it as an NFT on Commons. That's why it's kind of free, so we don't charge anything. But we don't also do too much marketing because we want to, first let's move to L2, then we can store everything, and then it's technically as solid as we want it to be. It just take us a bit longer time with optimistic L2. It's not everything working so nicely as one expected to. Takes a bit more time. Just this addition.
Yeah. Thanks for the clarification, Max. Guys, that's gonna do it for today. Thank you everyone for joining. If you don't want to wait until next week, join our Discord. The link is in the description of this video. Join our trading channel, our general channel, or join our Sandbase Pro channel. So when you have a Sandbase Pro subscription, there's a special channel for everybody that has a subscription where we talk about what we're seeing on the market. We talk with our community and paid subscribers as far as answering their questions, talking about the charts that they're looking into. So that's also an interesting group to be in. Thank you, everyone, and I'll see you all in 7 days.
Thanks, guys.